Boom! What's going on, Investomaniacs? Your boy, a Night Rider here, and today we've got your Robinhood stock market update of the day. Up first, we've got the private company WeWork, which is reportedly slow playing its IPO. That's right, it filed, it's teasing you, but it ain't gonna give it up that easy. Now, it's classy like that. First, borrowing $4 billion. That's right, the We company has visions to turn real estate into utopias, starting with its WeWork office spaces. It's already stealthily filed to IPO, but the Wall Street Journal just reported that it's first taking a pit stop with the banks to borrow $4 billion, which will achieve goal number 1 of the IPO now, so it's better ready for goal number 2 later. What are the 2 goals, you ask? Oh, I'm glad you asked. Goal number 1, raise money. With the IPO, WeWork planned to create millions of new shares of itself to sell to the public for cash. Goal number 2, go public. All of WeWork's investors, founders, the venture capitalists, and employees have shares that are just pieces of paper, which are really difficult to get rid of in the private market, especially for like employees and stuff. When it's a public company, it's so much easier to sell those shares for some cash. But WeWork right now is a cash-burning machine. All right, right now, it's hugely unprofitable. It's lost $1.9 billion last year. That's more than the $1.8 billion it generated in revenue. So here's how WeWork happens. Number 1, it signs leases for huge office buildings. Number 2, it WeWorkifies them. That's my word, not WeWork. So WeWorkifies. I think it's what they should call it though. WeWorkify spaces. They optimize dead working spaces and cut them into different sized rentable chunks, small enough for that one-woman entrepreneur or big enough for Amazon. Then it tosses in draft lager taps and ironic wallpapers, so it's so funny. And then, number 3, cha-ching, it collects rent from WeWork tenants. What's the takeaway? Sometimes it's safe to wait. Going public, it's like going pro. If WeWork raises $4 billion in cash now by borrowing, it can afford to take another year or so playing in the college leagues, right? The minor leagues, to refine its skills before facing the judgmental eye of the public market. Hey, and just look what happened to the big old companies Uber and Lyft. Those are some poster boys for money-losing companies, and they both went pro this year. And it didn't exactly work out so well for those 2 companies. So maybe waiting and staying private a little bit longer is the right decision. Up next, Snapchat. Snap stock has subtly and kind of shockingly almost tripled since its December lows. So something happened over spring break. Snapchat, it changed. The parent company of Snapchat, that's Snap, their shares have more than tripled since the December lows, driven by analysts upgrading their price targets for the stock, and that has been driven by Snapchat strengthening and then flexing its 2 biceps of tech apps, growth and strength. The left bicep, that's the growth bicep. The last time Snap updated us back in March, it had 190 daily active 190 daily active users. Come on, Snap, you can do that. 190 million daily active users. But to grow beyond that, it made 2 key moves. Number 1, it's going for those viral filters again. They've had the hits in the past, and boy, did they hit it out of the park again. You've seen it. That gender swapping filter back in May more than doubled the number of daily app downloads from 600,000 a day to 1.5 million a day. And number 2, an upgraded app. Finally, it updated its glitchy Android app, which increased the number of people snapping by 6%. And then you've got the other side, the right bicep, and that's engagement, to enhance the time users spend in the app and Snapchat, to accomplish that, has launched games in April. We've got Bitmoji Party, that's Snapchat's first original game, and that was deeply multiplayered, so you could spend time with all your ugly friends, and they're digitally, let's be honest, much better, unrealistic looking versions of themselves. And Bitmoji Tennis, which just launched last week. The new game lets you hit a microphone button to yell at your opponent without even having to leave the app. What more could you want, guys? The takeaway? Snapchat is covering steps number 1 and number 2, growth and engagement. Now, it's gotta focus on step number 3, money, money, money. Money. A shocking 90% of all Americans aged 13 to 24 use Snapchat. So you can say it's dead, but that's still a lot of people using Snapchat. It's just not growing so much. So the app is trying to monetize them through ads, and its revenues impressively rose 39% in the first quarter year over year. Hey, good job. There's only one problem. They're still losing a whole bunch of money. But investors, they at the end of the day, the big boys, long term, they're gonna want some money, they're gonna want some profit. And so that means Snapchat has to nail number 3. It's flexing growth, it's flexing engagement. Now we gotta flex our profits. And by the way, guys, I am super happy if any of you guys caught that December bottom. Beautiful, you guys are rock stars. Having said that, I just cannot get behind the stock losing this much money at this point. I need to see some better numbers before I can recommend it. Up next, we've got the $15 per hour minimum wage, which is being debated on a national level. There's 27 million winners and 1.3 million losers. A room full of office, bunch of people, bunch of brains, a bunch of smart people, and do little calculators and their pen protectors. That's the Congressional Budget Office, a nonpartisan government agency which takes proposed legislation and calculates the economic impact. Its newest report dives into the Raise the Wage Act, which would increase the minimum wage nationwide to $15 per hour by 2025. It'll likely pass in the Democrat-controlled House of Representatives, but it's unlikely to become law right now. Paying people more is a trend. Although the federal minimum wage, $7.25 an hour, can't even buy you a Chipotle burrito. Come on, bro, an hour of your time? You can't even get a Chipotle burrito. And that's before you even add on the guac. And you gotta add on the guac. That hasn't been increased since 2009, although the price of a Chipotle burrito has gone up since 2009. I actually don't know if that's true or not. 29 states plus Washington, D.C., however, have increased their minimum wage during that period. Here's who would win and here's who would lose with a national livable wage, by the way. That's what the politicians want to call it, right? Oh, we need a national livable wage. But of course, I know you're smart, right? You understand that's not a real thing because there's no such thing as a national livable wage. A livable wage in New York City is different than a livable wage in San Antonio, and to pretend otherwise are just politicians pretending like you're dumb. But you're not dumb. You got a little bit of common sense, right? Yeah, New York City, San Francisco, little bit more expensive than, your little rural town in Texas or Florida or Nevada or something like that. I digress. The winners, 17 million people, would get their pay up to $15 per hour. And about 10 million more would likely get raises because, if you were, say, like a manager earning $15 an hour, and then all the people you're managing who were getting minimum wage, now they're making $15 an hour, well, obviously, you're going to demand a pay bump. You're like, bro, I ain't going to do this harder work if I ain't getting, more money than all these minimum wage people who I'm managing is getting. So there's going to be that kind of ancillary benefit. So that's a lot of people who are winners, but here's the downside. The CBO also predicts that 1.3 million Americans would lose their jobs altogether and have zero income now. So now you make $0 an hour because money doesn't magically appear out of thin air, right? If costs go up, businesses need to cut costs somewhere. So that means less people have jobs. You can't afford the same amount of labor, right? That's kind of common sense. This will also increase the transition to machine labor, as human labor would now cost more, and therefore there's going to be some marginal amount of machine labor which can cover it, which would cost, say, more than $7.50 an hour, but less than $15 an hour. So now that it goes up, you're going to have more machine labor, which again means more displacement long term. Less people have jobs. There is a caveat. We just have to remember these are estimates based on all this like economic theory and math and stuff like that. The CBO isn't Professor Dumbledore. Not Professor Dumbledore, but the conclusion makes logical sense, right? Most people will earn more money, but some people will lose their jobs altogether. Common sense. What's the takeaway? Companies would lose at first, for sure. Higher wages equal higher costs. That means less profits in the short term. McDonald's has been lobbying against an increased minimum wage for that reason, but actually ended its recent fight because wage hikes on a national level just seem inevitable. I mean, just look at all the states that are doing it, right? It's only a matter of time before on a federal level it happens. But longer term, the CBO tells us that 27 million Americans will have more money, which means companies can charge more for their products, which in turn would help bring up profits. Now, I don't know about you, but to me, doesn't that just sound like inflation? Like you force the government forces companies to pay more, so that means costs go up. So then when costs go up, that means prices go up, so then consumers have to pay more. Isn't that just inflation? I don't know. Hey guys, I really appreciate you checking out my channel. I'll give you $5 gajillion if you subscribe to my channel, and that's not false advertising because it's not a real number. Hey guys, have a good one. Peace.